A good evening and welcome to Business Now, proudly sponsored by Absa Bank Uganda. Malcolm Sime, and today's edition brings you a closer look at some top stories affecting key industries from manufacturing to agriculture and financial markets. We will be discussing Uganda Clays Limited financial performance following their recent annual general meeting, exploring a major new coffee industry investment in Ntungamo. We also delve into the state of financial markets, including equities and forex. Stay with us for the next over 20 minutes as we take on the numbers, analyze the trends, and unpack the strategies that are shaping Uganda's economy.
Our government has not appreciated what entrepreneurship or innovators can do. Me, when I'm in government offices, they look to me as like this router has come again.
But the good news is, as you heard from the report, from the submissions, we're trying to bring in new machinery.
This is Business Now, but first let's have a quick look at today's business stories. Leading on global interest rate policies, the global central banks, including the US Federal Reserve and the European Central Bank ECB, continue to manage inflation and economic growth. That's growing speculation, by the way, that interest rates may be reduced into the latter half of 2025. However, inflationary pressures and global economic slowdown risks remain balancing act for policymakers. The impact on African markets: economies may see increased volatility in exchange rates, especially if the US dollar strengthened against local currencies. Experts also said this could lead to higher import costs for African nations, adding inflationary pressures. However, the potential reduction in global interest rates could also make African equities and bonds more attractive to foreign investors, boosting market flows and potentially driving higher investment in emerging markets across Africa. The African Continental Free Trade Area continues to advance, with significant discussions taking place about enhancing infrastructure and global transformation. The upcoming summit in Addis Ababa will focus on accelerating the integration of African economies and improving intra-African trade. Impact on African markets. This is the latest. This could result in a major boost to regional trade as barriers to the free movement of goods and services are reduced. It's expected also that manufacturing, logistics, and cross-border financial markets will experience growth, particularly in East, West, and Southern Africa. Repeat that, East Africa included. With increasing global demand for clean energy, Africa is becoming a key focus for multinational energy companies. Now, a major $3 billion investment in renewable energy projects, including solar, wind, and hydroelectric power, is said to be announced in Africa by the end of July 2025. The impact on African markets, including Uganda: this substantial investment is expected to diversify energy sources across the continent, and that provides African nations with opportunities to reduce their reliance on fossil fuels like petroleum. Key markets like South Africa, Kenya, and Egypt will be the first beneficiaries. They will see growth in renewable energy projects, fostering job creation in construction, technology, and maintenance sectors. This is Business Now. Uganda Clays annual general meeting. First, we turn to our attention to the baked clay building materials sector, where Uganda Clays Limited has reported a second consecutive year of net losses. The company's board revealed a 4.9 billion Uganda shillings loss for 2024. In that financial year, an increase from last year's 2.85 billion shillings loss. This slowdown in profit is attributed to rising operational and financing costs, with a notable rise in interest expenses. However, total revenue did see a slight uptick, rising from over 30 billion shillings in 2023 to over 31 billion shillings in 2024. And before we take a listen at the officials from the halls of Sheraton Hotel, where it all happened, it is key to remember that the National Social Security Fund, Uganda's Provident Fund, the NSSF, has significant interests in Uganda Clays Limited with a 40.5% stake, and it's the largest shareholder in the firm.
Every end of year, every 2 years, we revalue our assets, and obviously a lot of our assets are machinery. and depreciation is inevitable. So every time we revalue, you get the assets draw down, obviously. But the good news is, as you heard from the report, from the submissions, we're trying to bring in new machinery. Right now, we're not putting it as part of the asset base today because it's not yet assembled. But all that will now be assembled, most probably in the next 12 months, and then your assets will shoot up once more. But of course, also, as we turn clay, we have land. It has a value. But as the clay becomes finished products, okay, again you get inventory and all that. So eventually, as you convert, the assets do what? Do improve. So it's always a sinusoidal curve which you follow in this business. So what we are doing about it is exactly what I think I've explained. Now, NSSF, you are right, it's a thorn in the neck, I know. At one time we thought we had convinced them to do exactly what you said, that they waiver the loan and either write it off or turn into equity. That was almost happening until they were summoned by Parliament. And they said, no, workers' money doesn't just get diverted like that. So you must reinstate. They reinstated the loan, which had been stayed for some time. So it's not that we're not talking to them, but we are talking to them to the extent that you've heard. They have restructured the loan. So they've given us a longer period within which to pay. There are other ways of doing it. If we get a partnership, for example, who can give us the money to pay off NSSF and invest in the company? That is a beautiful solution, because that is what you're asking NSSF to do: convert the loan into equity, so that it is not a debt anymore. So that is the other line of discussion we are holding, because now the numbers are showing that Uganda Clays is taking off, and there are people now who are willing to talk along those lines.
Next, let's talk the agriculture sector, where the coffee industry is witnessing huge investments. Our team recently visited the Inspire Africa Coffee Hub in Ntungamo, where a state-of-the-art coffee factory is being built with a 112 billion shillings investment. On our tour, we were shown large-scale haulers, roasters, and were briefed about the plans to build an international airport and the conference center near the coffee hub. We also hear from the Chief Executive Director of Inspire Africa Coffee Park, Nelson Ntungamo, on how some government officials are hell-bent on frustrating supplementary budgets into his factory and the large industrialization agenda.
But which business do you know in the world where you get support in small tranches for over a period of 20 years? You'll get it and pay your workers, and that's it. So you need to realize that actually our government has not appreciated what entrepreneurship or innovators can do. Me, when I'm in government offices, they look to me as like this route has come again. Those guys consume the money. I create jobs. I have 600 workers working here before even the project starts. Meaning, on an average, I'm taking care of about 400 families. You understand? So, our bureaucratic government systems haven't understood on how to work with the private sector. Because when I'm in those offices, they tell me only people who have failed. They tell me the Andrew Gaseras, they tell me the Banyas, they tell me all these guys. They never tell me like Murwana. They don't tell me Emmanuel Katongore. All top economies of the world, just go and analyze the budget. Private sector is about 72, 73%. African countries, social services, public expenditure is about over 80%. Even the 20% that we say is going to the private sector, it doesn't reach. That's not correct. I can tell you, with this government public expenditure kind of thinking can never take a country any way forward. I'm one of those believers. And money takes time to come. But you need to buy coffee. It's a season. Money hasn't. And you know, that's why I always tell government people that governments all over the world should never do business, because they're the worst in terms of decision making, in terms of how they turn around time in doing business. Even in terms of, you know, saving, in terms of efficiency, of optimization, they're the worst in the world. And that's why they need to keep at a certain point and allow the private sector to thrive and support it in every other way. I'm telling you, I'm failing. Right now I'm running one of the generators you hear too, because we are running the freeze dryer. Do you know how much fuel I'm using? 1,000 liters. Right now, you can go there. So can you really do business at 1,000 liters? With someone probably who is providing, maybe doing maybe 2 cents of a dollar on their energy. Maybe in Europe. I'm just trying to say, also dig deep and take those challenges serious and know why they would have, because let me tell you, if I need to use $2 million and give me $200,000, what can it do in business? I'll put it, it will be, I mean, if I put it in this mountain, the season of rain is coming, the water will come and take it. You understand? And also not to glorify failure, but let's learn from it and know where could we not have done our very best. And please note, like I said, NB, I'm not a fan of people who misuse government money, because they block other people's blessings, especially in the private sector. Because those guys in government, you can't believe, even when you think the public has been the most noisy on me, but I can tell you the most opposition has been in government. Because they don't understand this thing. You get it? They don't understand this thing.
In the forex market, the Uganda shilling traded steady on Monday, closing at 3,680 and 3,690, buying and selling respectively. The local unit supported by balanced trading in the money markets. Our desk analysts expecting the local currency to trade within a range of 3,570 and 3,620 in the near term. Meanwhile, money markets remained liquid with overnights and 1-week funding rates averaging 9.65% and 10.04% respectively. And in the bond market, the central bank is set to hold a treasury bill auction on Wednesday this week, offering 355 billion shillings. And meanwhile, in today's trading session at the Uganda Securities Exchange, market performance showed mixed results across key indices. The all-share index dropping 0.26%, closing at 1,332 points, while the local company index saw a marginal dip of 0.02%, finishing at 342.83 points. Among the individual stocks, KCB led with a notable gain of 2.08%, closing at 1,339 shillings, while Airtel Uganda recorded a slight decline of 0.15% after releasing its financials. In total, over 36 million shares were traded, with significant turnover in stocks like Umeme, Quality Chemicals and Stanbic Bank Uganda. indicating Airtel's operations in East Africa have experienced robust growth in the first quarter 2025, propelled by increased demand for data services and a growing customer base. The company's mobile services revenue surged 17.7%, reaching $498 million, while data consumption saw a significant rise of 47.4%. Internet customers grew by 70.4%, bringing the total to 75.6 million. Strategic investments in network infrastructure, including the rollout of 1,244 5G sites, have been pivotal in driving this growth. Additionally, Airtel's mobile money services in East Africa grew by 29.3%, with revenue climbing $216 million. That's all for today's edition of Business Now, proudly sponsored by Absa Bank Uganda. Be sure to follow me on X at Malcolm Sima, that's my handle, on NTV Uganda, for the latest updates and insights. Don't forget to catch the repeat of today's show this Friday afternoon on NTV Uganda as well, and on our YouTube channel. Remember to subscribe for more exclusive content and updates. Thanks for joining us, and we'll see you next time.